Hello, everyone. Mike Arnold here, co-founder of Pat Trading Partners, along with the soon-to-be on Why Everybody is showing up today, Bob Iacchino. Hello, Patrick. Good evening, Charles. Good evening, Anissa. Afternoon, Jacob. George says, stocks on sale, buy two, get one free. Boy, if this is a sale, it's a stupid-ass sale. ES struggled to make up its mind today. It was pretty much a balanced day today. One of those balanced days. Happy Thursday, Daniel. Buy two Roblox, get a Peloton. Can I buy an Altera, get two Intels for free? I'd rather have that. Hey, Paul. So, how is everyone doing? By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the Mike button, and like the Bob button. All right. All right. Let's see. Hold on. We'll get to that in a second. I'm gonna bring Bob on real quick, and then we'll go through some stuff. But Bob will be here. Well, I'm reviewing some stuff. Let's just hit the magic Bob button. There we go. Hey, Bob.
Just reading Paul's comment there. I love it. What's going on, guys?
Hey, Bob.
Yeah.
You know, it's Saturday starts. It's one of the best times of the year. You know, it's a regular event, about every 6 weeks. But you know, it starts Saturday.
Quiet period.
Yes. No Fed speaky for like a week and a half.
That's my favorite period because I don't have to hear Fed speakies.
You know, that's the only reason. The only reason I still do it is because you don't want to hear it.
I know. I should know better at this point.
See if you just let it go. But now it's anchored. Mm-hmm. It's like in the vocabulary.
Yeah, it's in your vocabulary.
Well, nobody ever gave me credit for having great vocabulary, did they?
No, they did not.
Oh, boy. So how are you doing? The internet still humming along?
Humming along. So I got the new modem they promised me 3 days ago. So what do I do now? As a matter of fact, I haven't opened it. I think there might be two modems in there. So what do I do? I mean, do they actually expect me to unplug this modem and trade it out for that modem and risk that one not working?
Probably.
I mean, I haven't heard from them. I haven't gotten an email saying, start your new equipment. Nothing. I haven't heard from them.
Well,
so I think I'm just going to keep this one until they reach out.
You know how they'll reach out?
How?
You'll get an invoice in the mail for like $499 for unreturned equipment.
Ugh. This company.
And then you'll be dealing with that. They'll be like, you didn't return your equipment.
And they literally wonder why people just hate them so much. Why people are so anxious to cut the cord.
You know, and so I was up on eBay looking for some iPhone deals.
Yeah.
You know, and brand new in the box. People literally, they're like $200-$300 discounts only for one network. And guess what that network is?
Comcast.
Yeah. Hey, if you want an Xfinity iPhone, you can get a slamming deal. If you want an iPhone for any other company, forget about it.
Did I tell you that they said that I could get a discount on my monthly internet by switching somebody I knew? Doesn't have to be me. And I was like, your modem doesn't even work. The only way I'm even talking to you right now is because my Verizon service is currently working. I mean, am I supposed to believe that like your routers don't work, your internet doesn't work? I'm supposed to believe that your phone is going to work?
So can we just randomly switch people we don't like to?
By the way, that doesn't mean I wouldn't buy the stock. That's something you guys should know. I would still buy the stock if there was a price pattern that told me to buy it.
You gotta separate your dislike of Comcast from what's a trading opportunity.
As you have, Mike, with your dislike of Elon Musk.
Yes. I personally, he does not float my boat, but yet there are trading opportunities in Tesla stock.
Yeah, sure is.
So you can't be so blinded that you don't see opportunities.
Nope.
Nope. So let's see what everybody else is. Did I say hi to Paul? Amateurs are still buying Netflix after missing on the top along its subscriber count and the CEO, what is now called co-CEOs. Who cares about the increase in subs if they are not making money? Well, everybody cares about the subs. You know what? It all matters the subs. It's just the subs.
Yeah.
It just you know what? All I can do is trade the patterns. That's all.
Yep.
That's all. Our system works. What did Brainerd say now? Do you agree with this? Brainerd balance sheet runoff equivalent to 50 or 75 basis points of tightening.
Yeah. If they were running it off, most recent data shows their balance sheet is shrinking, but the treasuries is increasing.
Do you want to get? I mean, I've seen that too, and it was one of the things that actually jacked up some of the liquidity in the market over the last little bit. Do you want to go into that and how it's important?
I mean, I think maybe at the end of the day, the overall government balance sheet is not shrinking. So I think that would be sort of the takeaway. I think it's difficult to get into that and explain to people why that might be important because you're getting into not necessarily nuance, but you're getting into a part of the yield curve that is uninteresting, or rather, the part of the balance sheet that's uninteresting. But essentially, monetary policy is not having the tightening effect that people think if they just stare at rates and if they just stare at the Fed balance sheet, because the Treasury is actually now buying treasuries, which is basically they're infusing money into the system. So it is a way for the Fed to kind of sustain. So there's two things that are helping the Fed sort of, what's the word I'm looking for? Not be liars. Number one would be that they've changed the way that they're calculating CPI. They used to reset the housing survey every 2 years. They're going to reset every year now. So that'll allow I'm not saying this is the wrong thing to do, it's probably the right thing to do, but it's going to allow new leases, which have been coming in lower, to come into the CPI calculation and lower it, right? Now, again, that's probably correct because one of the things that has skewed the shelter component of CPI is that leases are signed. They're generally signed for a year or two, and they don't reset those leases for about 2 years. Well, now they're going to reset them after a year. So that's one of the things. The other thing is that the Treasury is offsetting what the Fed's not buying to a certain degree. The Treasury is actually buying their own bonds. So the tightening that the Fed is doing through their balance sheet reduction is actually being offset to a certain degree by the Treasury. So it's not as tight. So the Treasury is trying to engineer a soft landing, basically. And I don't know if they'll be able to do it because it's never been done before.
Well, there you go. There you go. The stupid comment of the day. I got to give a stupid comment of the day, not in anybody in here, but from one of my conversations was they're not going into anything treasury related because the government could default. That's why they're going all in on stocks.
Mm-hmm.
You got any?
Say that again. You broke
They're
up
not because I said, you know what, you could get pretty good risk-free returns and still short-term bills and stuff. They're like, oh, I would never put at this point with the government potential shutdown, with the debt ceiling not raised. I'm not touching short-term treasuries because they could default on them. I'm going all in on stocks. And
I mean,
uh,
they're not defaulting.
no. And I said, well, all right. First off, they're not defaulting. Second off, let's say the government defaulted on its obligations. Do you think stocks are going to be the risk-free alternative?
And that was the whole point of all this easing, right? It was forcing people into riskier assets. Keyword being riskier. Okay.
Boy.
So now that there's actually a yield on the treasuries, people should understand, like when you look 3 months settled at 471, that doesn't mean that you, on every $100 you put into a 3-month bill that you get $4.71 back at the end of 3 months. It's an annualized interest rate.
Yeah.
Right. So if you're in a 3-month bill, in order to achieve that 471, you would have to purchase a new one every 3 months and have the yields stay there at 471 for 4 cycles of 3-month bills. Okay. But that's the same with everything, right? If you buy a bond because it has, or I'm sorry, a stock because it has an annual yield of 5%, you don't achieve that yield in one dividend payment.
What?
Right. It's
What?
annual. I know, right? So honestly, that's one thing they should teach in college. When you teach literacy in college, which they don't do, financial literacy, they should teach yields so that people understand A, yields on bonds, B, the taxability of munis, of which there is none. And although some actually have some taxable risk, but tax-free munis, so I should be specific about that. And then 2, dividends and how the dividend yield works. And then 3, how your student loan is at a high interest rate. That should be the other thing that they teach.
I gotta change my portfolio. I thought I was gonna get that 5% Intel yield every dividend payment. What was I thinking?
I know, right?
I love that. Woohoo! Pay me 20% a year.
People I know have thought that, and they're like, "Wait a minute! You mean I don't get 4.7% over 3 months? No."
Yeah, I've had that conversation recently with people, and I said, "Hey, you're going to get annualized for." They're like, "Annualized?" I'm like, "What do you think you get 4.7 or 4.5?" The conversation was right; it was around 4.5%. I think if I was getting 4.5% every 3 years, forget the stock market. I mean, every 3 months, I'll just keep rolling it into T-bills as long as I can.
And that's why the inverted yield curve is a problem for banks, right? So banks borrow short and lend long, right? So they borrow short-term bonds, they borrow money short-term, and they lend it long-term. So who do they borrow from? Well, they borrow from the Fed. So when they lend you for your house, let's say they lent you money for your house at 4%, right? Well, let's make it even lighter than that, at 2%, which you could get a while back, right? 2.5% on a 30-year or a 15-year rather. And the Fed borrows that money every night, right? So they lent it to you and they expect to get a payment, and then they borrow that money every night to make their balance sheet fit within Fed guidelines. So the longer that Fed funds rates are at 4.5 or 5%, the more money the banks lose on a day-to-day basis. If it were to be there for 30 years, they would lose money, or I'm sorry, 15 years, they would lose money on your 15-year loan, right? So even now, when we're at overnight lending is what, 4 to 4.25, Mike, I think, the Fed funds rate right now?
Yeah, it's around there.
I think it's 4 to 4.25, or it's 4.25 to 4.5. I don't remember what it's at. But they're losing money on a daily basis, but not over the life of the loan, because they expect those things to shift back to where now they're lending at higher rates, and then it'll shift back where the short-term rate is lower and they're making a big profit on those loans, right? So
Yep.
it's it's less complex than it sounds, believe it or not. It's just a daily accounting that they have to do every single day. Of course, that's what daily means. So I don't know why I said that twice. Let me talk about something, then I can let you guys do the charts, Mike. I want to talk about one thing. So Lael Brainerd basically said the most dovish things I've seen said, right? Smaller hikes, inflation is easing, taming inflation may not cause big job cuts. That's the soft landing. I haven't seen any other Fed speaky say those kinds of things. Yesterday, Brainerd said the opposite, basically. Not Brainerd, I'm sorry, Bullard basically said the opposite. He said essentially that colleagues should not stall on remaining interest rates. They should get them done. So he, in theory, was, and he's not a voting member anymore. He, in theory, was arguing for 50 basis points at this next meeting, right? They shouldn't wait. If the terminal rate's going to be 5%, let's get it done. That's what Bullard is saying. And I personally think Bullard is right, although I don't know that that's what the Fed is going to do. I just think Bullard is right. Get it done and then pause, because the longer you wait, the less your pause is likely to hold, right? I mean, the longer it takes you to get to what you think the terminal rate is as a Fed governor or a Fed voting member, the less time that you can hold those rates. So right now we've got I can't read this. Looks like a 96% chance of 25 basis points at the Fed meeting. Is
Yeah,
that
we're
right, Mike?
96.3.
All right, 96.3. If you hit the compare tab on that, you'll see how much that jacked up from December, where December it was at 65%. But we've essentially gone the whole beginning of this year in the high 90s, right? Bullard is saying that's not right. But again, as we get closer and closer to this meeting, this thing it hasn't been wrong many times. The CME Fed Watch tool. I've never seen it above 90% and have that not be what the Fed does. So it's definitely going to be viewed by markets as a pivot, even though it's not a pivot. I think they're going to do at least two more. And this is what I said they would do. I said 75, 50, 25 on these last few meetings, and then they would hold. But there's been many, many Fed speakers who have said we need to get to 5%. We need to get to 5%. And I think that's what Bullard was speaking to. Bullard was speaking to we shouldn't be waiting to get to that terminal rate. We should hurry up to get there. Lastly, I want to leave you with one more thing, and then if there's any questions for me, Mike, I mentioned in the last time, not yesterday, but the time I was on before that goods prices have been collapsing, and services inflation is what is kind of keeping inflation in that higher range, at least keeping it in an uncomfortable range for the Fed. Services inflation essentially is services wages, and they're still going up. Goods prices are now, I should say commodities are now rising. Crude oil is up about 13.5% since December. Copper's up about 35% since August. Be careful of that. And this is something that I was wondering about and was worried about, where you have a situation where people become complacent that goods inflation is falling and it's going to stay It's going to stay down. That isn't necessarily the case. Generally, things don't go down in, parabolically and stay there, right? They generally pull back a little bit. So watch this pullback higher for commodities, because gold is up, silver's up, beans were at a 7-month high, soybeans, they were at a 7-month high a couple days ago. Commodities are starting to rise, and commodities will feed into goods. So anyway, that's just something I'm keeping an eye on.
Yeah, I actually talked about the other day. What if inflation pulls back, even to the mid fours and sticks? Because
Yeah.
you have stuff like oil creeping back up. We have a confirmed but not yet triggered double bottom. You got copper that hit those double bottom major targets this week. That's up substantially. You have gold and silver, and those are, they're not as industrial as copper, but they're used in industrial applications, and you have them up. You mentioned beans.
Yeah.
We looked at grains the other day, and we've had some bounce backs in grains going into the planting season. So it could be interesting if stuff stays elevated. You could have some tick ups in inflation again in a few months.
Yep.
And then what? Then we've had a pullback, but if it stays a little stubbornly higher, then we're going in recession, then we get stagflation.
Yeah, it's funny because this was a conversation that we just had Stephanie Hughes on the podcast. She's actually a Canadian journalist, and she covers the real estate market, the housing market in Canada. And one of the things that we discussed is that things don't, if inflation turns back around, it's not only the Fed, like we got it from Christine Lagarde as well today. right? Christine Lagarde actually spoke directly to market participants. She said she would advise you to change your view for those who don't believe her. That was a really strong statement, right? That's the strongest one I've heard so far. We would advise you to change your view. Now, she didn't say who she was talking to. She was talking to bond investors, stock investors, commodity investors, currency. I don't know. But basically, when you look at the overall global markets behave as if they don't believe the central banks. And she spoke directly to them. Governor Macklem in the Bank of Canada said he doesn't want to loosen policy until he sees a 2% print, till he sees one. Their last print was 6% and change. It's like 6.3. Does that mean he's actually got to see a 2% year over year? Now, it's interesting if you think about that. Let's say that Jerome Powell said that. People would be like, oh my God, he's crazy, can drive the economy into a recession. Well, Lael Brainerd said that there may not be job losses. But if you were to get to the average inflation target of 2%, that means you have to drop below it because we spent a lot of time above it and well above it. Mike, next time you get bored, do a back of the envelope calculation as to how many months we would have to be and how far below 2% we would have to be to get the average back to 2%.
I'm not that bored. It's quite a few months.
Not that bored. What'd you say?
It's going to be quite a few months, many months.
Below 2%.
Yeah. And not just like 1.9, 1.8, because that's your trickle down, trickle down inflation, not your, even if we went into deflation for a few months, it would still take a few months of outright deflation. So,
and then given that took 27 years to get from the highs in yields to zero. And it didn't go straight down. It went down, then up a little, then down, then up a little, and down, just like markets. So I don't know why people would think that the Fed is going to go to 5% and then go right back to zero. They'll probably go 5%, 3%, 5.5, back down to 3.5, 6, back down to 4.5. That's how you normalize rates. Anyway.
We'll see. Hold on. Hold on. I got to get through a couple things. Hey, Options 22. Good afternoon, Donald. Hey, David. Hey, John. Options is offering up his systems expert to assist. His CTO lives in Land O'Lakes. Hey, if you forward me your email stuff to support, I will get it over to Bob. George, leave Elon alone. Elon does not need. Okay, Elon's a grown-up man. Okay, well, I can't even say that. He's a grown-up man-child. You know what? Who fakes full self-driving videos? So he doesn't need. It did. Hey, the Painted Black video now absolutely confirmed. So hey ho, Waka. Wait, here's the fun question from George. Your best man is stuck at the airport. Who's giving the toast at your wedding? Jim Cramer, Michael Burry, or Jerome Powell?
Oh, 100% Blurry. I want Blurry to do it, and I want him to do it when he's blurry.
It would not. Boy, how long do you think your wedding would last if it was Cramer?
Oh, my God.
You'd be divorced in a week.
How many times did he mention his wife? My wife, she was out shopping. My wife doesn't watch this show. God, he's an idiot. It would definitely be Blurry. Who would hope he would do it barefoot?
Would he play the guitar there at your wedding, though? That's the question.
That would actually be even better.
See? How boring would Powell be?
Oh, God.
Jerome Powell has some prepared remarks. Could you just imagine prepared remarks?
Thank you for attending.
That would be the mad rush to the bar. Is it open bar still? Because everybody be funneling out to the open bar.
I would be like, we're glad to see all the diversity here and inclusion at Bob's wedding.
All right, Mike, it's possible for the default under World War III scenario. All right, if nukes really start flying,
don't worry about your.
We have a bigger problem than You know what? If nukes start dropping, there might not be a live stream. It might miss a day. I'm just saying.
Yeah, I heard a really interesting thing. The sun gives off the energy of 1 trillion nuclear bombs every second.
See, that's why we need to ban nuclear energy. Look how dangerous it is, Bob. Look how dangerous it is.
Real
Oh,
close. Sterling asked if we were on the floor in 2010 when the flash crash happened. We were not.
no,
I was gone from the floor already. So,
no.
by the way,
Go.
at that point, it was so electronic. The floor, I don't think the floor would have been that interesting.
The floor's been dead for so many years now.
Yeah.
I mean, it's so. Let's see if there's any other. Hey, Charles is asking. Hey, Bob, UK inflation came out this week, and for the basket, food was one of the highest increases, along with hotel and accommodation. I feel this is feeding into the inflation, especially for
Yeah,
small island. We feel the shocks more.
The UK and the EU are behind the curve on inflation. Their inflation didn't peak as quickly as the US did. It's not likely to fall as quickly. But yeah, the food costs have started to drop here in the US, although they were up last CPI. And that's the thing that I keep telling people when you talk about inflation, Charles, you're not talking about something that just because it dropped a few months in a row that it's not going to rise again. It's just like any other thing that you could chart. Okay, that's number one. Number two, we have not had deflation except for 1 month here in the US if you're looking at CPI. And CPI, the deflation was 0.1%. And the last time we had a negative number on CPI was 2020. So I'm not convinced, inflation, the rise. This is what God, this drives me crazy because one of the best market people I know, other than Mike, Jim Iorio, keeps saying that prices are coming down, and they're not.
They're
They're just
not.
increasing at a slower rate.
Exactly.
You
I had
know?
that again. I had that
And
same
by the way,
conversation the other day. People are like, inflation is dropping, goods prices are coming down. I
no,
said, no, it's just increasing
no,
at a slower rate.
right. And I know what Jimmy means. Like when I correct Jimmy on this, he's like, you know what I mean. And I know he knows what I'm saying is true, but it matters. It matters a lot to say this correctly. Prices are increasing at a much slower rate. That's what's happening right now in the US. The UK and the EU, Charles, are both behind. Their inflation rose a lot later and will fall a lot later. The rate of growth of inflation rose later and will fall later.
So Mike says, great show today as usual. And I gave him his mafia name, by the way. It's Mike the Numbers.
Mikey numbers.
Mikey Numbers. There we go. You refined it. That's much better. Mikey Numbers. As long as he doesn't make him called Mikey.
All right. What else for me? Because I turned my flat top grill on to start cooking. So
Flat top grill. What are you making?
steel made, made in the USA, steel made flat top grill. I am clanking stainless steel cookware like you can't believe.
I need you to. Can you send me a video of this? I need to
Sure.
see this. Oh, Connor, avocado prices are down, so for all our avocado toast lovers, we're set. Eggs though are through the roof. Let's see. Is there any Bob? How bad do you think credit markets will get? JPM set aside 1.4 billion. Wells Fargo 957 million. Blah blah blah. Prepare for soured loans.
All right, so let's talk about that for a second. Because again, we had Stephanie Hughes on the podcast. We did it on Thursday instead of Friday. Hopefully, I'll get it out on Sunday instead of Monday, but I don't know. Stephanie Hughes is not a big presence on Twitter, but she's in her 20s and she's a journalist from Canada who covers housing and debt and central bank in Canada. All right. Um, it's interesting because she talked about the Canadian banks and how big their loan loss provisions have gotten. What did our financial media here in the US do? Talk about how much of that is Twitter, how much of it is Elon Musk and Twitter. That's garbage. She covered the Canadian banks. I said, please come here and cover the US banks, because the loan loss provisions that they're setting aside, that the US media, US financial media, which is crap, which is why it's good that you're on this YouTube channel so you learn something. The big loan loss provisions are for housing. They're not for the one Elon Musk deal, as much as some of these banks are going to lose on that deal. Okay, that's not what it is. So you got to look at those loan loss provisions. I think they're going to get worse. And I think it's potentially part of the reason Shashi said, is the S&P going to 3,000, Bob? No, I've never called 3,000, but I've called near 3,000. 3,300, I believe, was my level. Mike's was a little bit different, so we'll go with Mike's. His ultimate big support level down below. All right, so I think loan losses is part of the reason, because banking could lead it lower. That could be part of the reason that it goes lower. So watch the housing loan loss provisions, not the Elon Musk loan loss provisions. And again, that is not my, I'm an Elon Musk fan in a way, because I like what he's doing with Twitter. He is an SEC crook. He's committed several crimes as per the SEC, although they don't convict him of it. And he stuck it to the banks with this freaking loan. He really did. He got them bad. But he also stuck it to Tesla shareholders. So that's not what's important. What's important is the loan loss provisions for homes. So thank you for that question. I think they're going to get worse. I think it's part of why the banks are going to get hit.
All right, real quick. Bob, is the Fed looking at average inflation normalized over the past few years to be around 2%, or the absolute numbers?
Well, they claim they need an average inflation, but that's what they were saying when inflation got to 2.8%. And in a weird way, when it got to 2.8%, Jerome Powell said, well, we've had it so far below 2% for so long that a little bit above is okay. I don't know that I hear them saying a little bit below is okay. I don't know that they'll say that. Jerome Powell, he called it an adjusted average. Mike and I made a big deal about what the hell an adjusted average means. I took 2 statistics class. Mike took a lot more than that. And I don't know what an adjusted average is. And Mike couldn't answer the question when I asked him. So I don't know the answer to that. But I suspect that once we got to around 3.5%, they'd start to back off and say that we're well on our way to below 2%. And then people would start putting pressure on them to cut rates drastically when year over year inflation gets below 2%, and it will get there at some point. And I suspect they would probably agree with the market and do that, but I don't know.
Dave, here's a macro geoeconomics question. Is there a simple answer to why the U.S. dollar remains so strong against the Colombian peso? Does it have anything to do with our export-import ratio? I can't answer that.
I will tell you what, Rams, are you Colombian? Because I actually asked, I have a lot of friends there, and I actually asked them that. And they said it's still what they buy all their commodities in that they don't create there. This friend of mine is actually part of an initiative in Colombia for Colombian farming to take hold in some of the mountain regions and some of the valleys that didn't have the economic interest to acquire the money to turn that into an agricultural hub. And they're trying to do that. Okay, this friend, his name is Andreas Arango, and he follows me on Twitter if you want to find him. They're trying to do palm oil, coconut oil, soybean oil, all these different kinds of oils that they have spent years importing from the US. And he basically told me it is still because of so much of their capital, so much of their debt, and so much of their agricultural goods still come from the US. And those things are denominated in US dollars. So I'm paraphrasing his answer. You're half Colombian by adoption. Lucky you. They're good people, man. They're really good people. I really enjoy the time I've spent in Colombia.
Mike, Bob, I heard car prices are about to tank due to the amount of people defaulting on loans. Banks are starting to repo those cars, flooding the market.
I wouldn't disagree with that. I think that could very well happen. That would be used car prices.
Used car, new car, because there's still a ton of stuff with very short supply on new cars. So
right.
That is not, but used cars are pulling back substantially. But
that's by the way, the reason, I'm sorry, Mikey, but that's part of the fundamental reason why the Mexican peso rose so hard is because there's a big theoretical push to move a lot of these supply chains, especially the automobile supply chains to Mexico. So there's a big speculative rush to get into the peso early. I think it's probably way early, but the peso reached multi-year highs earlier in the week. And I believe it's been coming off since then. I haven't looked at a peso chart. I'm looking at one right now. Um, yeah, it's come off since then, but it definitely was very, very strong. So anyway, I would just throw that in there.
Uh, Thoughts on the potential SLV breakout? I'm
I mean, we've Mike and I have both been fans of that. I'd say talk to Mike about the chart. So maybe you want to talk about that when I hang up, Mikey.
yeah, I'll do that when Bob's done. Bob, do you think oil will reach 100 again?
I don't. I think high 90s is the cap. And that's just because I think that um, I don't think demand will actually reach that level. But I could be wrong about that, and I could change my mind quickly. Once we got it through the 60s that we talked about, didn't quite reach the ultimate target, but it reached mine and Mike's first and second targets, I believe, but not the ultimate target of that weekly double.
It reached the
I don't
first
know that
so far. It's not off the table still.
it's not broken yet as a double. So, but I had said that I thought 65 before 105. I don't know that we get much above 95. I think that would be a dramatic shift in supply and demand, and we haven't seen the fundamentals for that yet, in my opinion. But if the chart changes, I will go with it.
Well, even if we triggered a short-term double bottom, confirmed but not triggered, the
Mhm.
full price target. This you see, you can't make this stuff up. Can you see the chart?
I can't see the numbers, but I see it. And it goes right to the 200 week.
Yeah,
Or is that a
200
day?
day, right to the 200 day, and the
What is
prior
it?
highs from mid-November or beginning of November. So, and that's only
What?
it's under $93.
All right, there you go. So yeah, I'm going to go with no.
So even if it completes that, and that still doesn't invalidate the long-term price target on the weekly double.
Right.
So again, we could easily see a short-term bounce move if it's triggered, and then another big rollover play, especially if there's a steep recession. Who knows? But all right, uh, hold on. One more from this is the last one. Pavneet. Bob, if the Fed starts cutting rates end of this year, does market still interpret it as bad and the sell-off accelerates even if macro is not in the worst state at that time?
So the market hasn't learned yet, Pavneet, that it shouldn't just go up or down based on rates. One of the things that I think is going to hit the markets is things like loan loss provisions that we just talked about, and things like the higher prices and the job losses. We've seen a lot of job losses. I don't know what the hell Leo Brainerd is talking about. 10,000 for Microsoft now. Bank of America announced a hiring freeze. Part of what's going to hit is corporate profits. And right now, currently, the market still thinks Fed eases, stock goes up, Fed cuts, Fed hikes, stocks go down. There's another component to that that has helped and hurt the stock market for 100 years. I don't even know if there was a stock market for 100 years, Mikey. Um, Corporate profits. And that's what I've been saying since late last year. Mike's been saying it as well. Corporate profits are predicted to be too strong still, especially Q1 going into Q2. So Amazon 18,000 layoffs, Sterling just said. So it's not simply a Fed cuts, Fed hikes, but to your point, because you made a good one, right now the market hasn't learned that there's other things to look at yet.
Yeah, the market. See, this is the most anticipated recession without a decline in corporate earnings.
Yeah. So anyway, my grill is ripping hot right now. I can smell it in here. So I'm going to
Well, you
go
better go.
save your question for Tuesday. I will
All
send
right.
you some video of this.
All right. Thank you, Bob.
All right. See you guys.
Hello, everyone. Just me. Everybody can drop off now. It's just me. The superstars left the building. Let me answer the silver question. I am watching for higher prices. Silver, from my perspective, is still to be traded around a core position for the time being. We are still rolling over in cycles with coming out of overbought. We're holding the weekly rotation zone. If we start getting daily closes below 23.34, I'm targeting a bigger pullback to about 22.25 and reassessing there. The only thing that triggers me in the short term is if we get a close back above about 24.50. And then short-term targets are 25.25 to 25.50. A close above 25.50 start shifting me into a less meaning I got to be more aggressive on pullbacks, taking profits less aggressively because we should make a run higher. So those are the key structures. So yes, if this is so far a sideways correction, remember there are two kinds of corrections. You can move sideways, which actually favors a breakout. However, we close back into this weekly rotation zone, and this wouldn't break this pretty substantial bottom that was put in. It would just mean a pullback, which I think would be a pretty decent gift. Even a pullback to 21.35 would be a pretty decent gift from a longer term perspective in silver. So that's it. I gave the key levels on both the upside and downside that I'm watching on a closing basis. Right now, so far we're holding. You can clearly see the sideways correction. With that, do I ever think it will get back to 50? There's a potential. I'm more watching for it to get 30-35 area. But I mean, if it for some reason got a ton of momentum on it, and you got some squeeze plays going on, it could. So that's where we sit. Where do we have now? What else? All right. Pullback continued, still holding that 50% level, even on the closing basis, holding that 50%. Remember, between 39.12 and 38.81, I'm watching for a short-term bottoming play with daily cycles heading back down. There would be on a break. Now remember, OPEX tomorrow. Besides, we didn't go over all this other stuff. Let me get back here. Tomorrow, we still have Williams speaking tonight. So in another hour and 20 minutes, Williams speaking. And then we got Harker speaking before the open tomorrow. Existing home sales, Waller speaking at noon. And that pretty much wraps up our Fed speak into the quiet period. Remember, starting Saturday, Fed quiet period. For those who don't know, that means they cannot say anything. They have no public speeches. They're releasing no statements until after the rate hike decision on Feb 1st. Now, a lot of people think that if they have to, especially Powell, if he has to get something out to the markets, there'll be the Timiraos leak. Okay? You'll get the Wall Street Journal, Nick Timiraos article, which will somewhat slant something. So, but technically, by the letter of the law, the Fed is in quiet period. So this should wrap up Fed speak starting tomorrow, after tomorrow. All right. Again, your market map, besides Google and Meta, pretty decent bounce. And oil, Again, oil bounced, but then you had some pullbacks in other stuff, industrials taking it in the shorts today. Groups, energy and comm services leading higher. Industrials and technology getting hit. Fed watch, we already talked about, 96%. Fear and greed in neutral mode. All right. Now, bigger picture thing I'm watching for, the cycles to get back to top. That's when I'll really start to be focused on stuff. Now, based off the %B buy pattern, the modified %B buy, we break above today's high going into OPEX and then close above it, it could get some follow-through move. My target for that follow-through move would be the 200 again. And then I'd use the reverse harmonics. All right, the reverse harmonics off the down move, which could shift if we make a new overnight low, but the key area above that I'd be watching is 39.85. We'll look at the option positioning tomorrow. Today was pretty much a balanced day. This is what a balanced day looks like. I also had the short-term harmonics up there here. By the way, if anybody is wondering, yes, this is technically a double bottom. This is technically a double. The key level that invalidates it is a close on a 4-hour basis below 39.1625 or a trade through 39.11. So I'm watching if we do get some bullish patterns and close, we could see at least some short-term follow-through back up. If we break down below today's low, 38.81 is my primary target area. NASDAQ, not yet pulled back to 50, holding the rotation zone. NASDAQ also above today's high for tomorrow only would be an intraday play for higher prices and then on a closing basis for a pop upwards. Would also be a rotation on a closing basis, a rotation zone entry, and take it back above the 50. So those are what I'm watching for to the upside. To the downside, we break below today's low, 11,255 and then 11,182. Remember, we have a decent OPEX expiration tomorrow. The Dow cycles more rapidly, almost oversold, almost getting back to oversold, and Dow has the same position with a break of the high, with rolled into it, need a close above that to be carried forward. That's what I'm keeping an eye on. If we sell off, 32,930. Especially on a closing basis. Why? Because if we really start breaking down, I'm targeting the 200. Russell, where'd my orange line go? There it is. Where'd my orange line go? Russell is a long way off from that high. Technically would be the same setup. The key area, again, we had a 1832. I'm really watching for the key support if we do break below that about 1824. So not much else to talk about there. Notes, just holding up. After hitting this little harmonic, we should get a pause bar unless we take out tomorrow's high. So that gives me my next key harmonics to the upside, which would be 116.25. Dollar index, not much to talk about just yet. Still caught in no man's land, insider day from yesterday. So still sitting on hands with that. Crude, still watching for the close above 81.50. That's what's key right now for the longer term pattern. On this, we did not get that 4-hour close back above the 62.5. I was watching to see if that closed above there, which it did not yet. So I'm still watching before that 81.08 on a shorter term basis. Not going to go through everything because this has already been a long session. Yen is I'm being patient now with. Nothing with the yen really. Euro, I'm still, again, this is moving sideways. Dollar index is moving sideways. So again, there's not much going on in currencies. Bitcoin still holding up at the recent so far. This I would consider a horizontal sideways correction. Tesla, just a very narrow, choppy day today. Could not make up its mind. We started getting below 125.50 and then just slamming into that daily rotation zone and pausing. So it's either now it's really nice breakout play above. It filled this little mini gap, but breakout play above today's high, 130. My target goes to the 136.50 area. Break down below today's low. My target goes to the gap fill of 122.40. Those are the short-term levels. Nothing's changed in the long term. We had Netflix, which you see a miss on revenue, miss on earnings. But see, earnings dropping with increased subscribers to me is like, whatever. But the market liked the change in CEO news and the subscriber thing, even though it's on lower. They sort of talked around the revenue tier stuff, but it looks to be at this most recent high. If it takes out 340. We could, the key levels, because again, it could fuel some stuff. The key levels that I will be watching, remember, 340 is this very key breakdown level. So that's where, if it does, and the market cooperates with a market rally, especially a NASDAQ rally, the bigger breakout play for me is above 340. 347.55 stop reduction. 354 is roughly first target. We're still in this upward sloping channel. 375 is a longer term target if it does holding up, and if it eventually makes a run for a retest 406. The only other thing, since we're going to open up probably tomorrow around the highs, on a weekly basis, this would still be a double, not on a daily basis. But if it stalls out, we roll back over, and then tomorrow, based off an open up here and take out on a closing basis the lows from Thursday, we could easily retrace with another little mini double pattern. So I'm waiting for tomorrow to see how that sets up. They're also getting cycles back to the bottom. So that's the little current analysis. Would I be floating this for like long term, put in the portfolio and walk away? No. This is still very tactile trading, especially as this rallies. It's still got a P to E. Yeah, people are saying, well, see, earnings should be expanding, blah, 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 but they missed on earnings. Yeah, they have some subscriber growth, but you know what? It's not adding to the bottom line. So paying up at this point, and even as it rallies up for a long-term prospect, no. For short-term trading opportunities, fine. Not for a long-term, I'm just slamming it in the portfolio and walking away. I think there's many better opportunities for longer-term stuff rather than Netflix. But it is still definitely tradable. I'm going to wrap this up pretty soon. Apple. Head and shoulders forming on the 4 hour. It could be a sloppy upward sloping one if it rolls over. I'd be watching for it to take out. If this starts taking out 133 again, we could easily see a retracement there. I mean, it's stalled out at a key breakdown zone. The next play, if we do get continued market strength and Apple gets a close above its 50, there will be plays the upside. The targets would be 141, then 143.21. That would be a short-term swing trade breakout trade for Apple that I am keeping an eye on. And that doesn't have to be for tomorrow. So if you want the key level I'm watching on a closing basis is around 137.80 to 138 on a closing basis. Hey, Michael. Sterling just loves those Russell doubles. Telling you, this is why I taught that pattern. You learn, if you master some of these double setups, they are, especially against key levels like this one. Remember, I had 1832 on the charts. I'll go over this real quick. But look, I don't know if I think that's what you should be referring to, because that's the major double bottom that triggered today against the key level. And this pullback does nothing to invalidate it. But you learned a highly reliable pattern. No, it's not guaranteed. But it's got very strong probabilities, especially the way we use the targets. Is there a triggered 15-minute double top on the Russell? You mean this? Yeah. Yep. Intel, nice little 3-day, I think it was a 3-day pullback. Yep, 3-day pullback. Nothing's really changed. Nothing's really changed. I mean, I think if we did drop back down, I'm still watching for it to retest its high areas, potentially before earnings, the 26th. But if it drops back, this is why it's still up to, it's tradable around a core position. Drops back down here, I personally can't give trading advice. I think it's a great area to always pick some up. We rally back up here. Fantastic if you're a shorter term trader to lighten up and wait for some pullbacks. If it triggers, guess what happens if we trigger? This is still potential weekly double bottom. Now, we drop back down here, it turns into a triple, and it's off the table. And you also see how well the rotation zone is holding. But if it were to pull back up, then this is where, if it triggers the double, before invalidating it, of course, then guess what? It's a hold for a little longer run. So it's, hey, not unwinding because I have targets the upside. So it's just hold and hold through dividend plays. Other than that, there's nothing. This is the kind of stuff you don't, from my perspective, you don't even look at every day. It's not a stock. You set some levels that you're watching depending on how you're trading it, whether you're long term and you're looking to accumulate at really good prices, whether you're cash secured puts, whether you own some and then you're selling some calls out against it, maybe at key highs. But this is something you just set price alerts to, and hey, if you happen to glance at it, you glance at it. Cycle's getting back to the bottom. So keeping an eye on that. All right, with that, I need to go take care of some things. We've been on for an hour. I will see everybody in the morning for Option Expiration Friday. Have a great evening, and I shall talk to you then.